Hi, it's Larry Gaines from Options on the Open. In this video I'm going to show you our trade of the week, and which was based on gold futures, and also I'm going to show you an overview or update on the broad markets using the cycle model. So it was a pretty crazy week, and yesterday, Friday, was absolutely nuts, but it was a fantastic day for us. So let's get started. Actually, before I get started, if you've not received my free ebook, please go to optionsontheopen.com, optionsontheopen.com, and on the home page you'll see this download your free ebook, and it's got 15 really great option trading strategies. So just put your name, email address, click send, and you'll get it right then and there. So it's a really nice ebook. I think you'll get a lot out of it. So let's get rolling here. Now, to start off, I just wanted to give you an overview of the broad markets using the S&P 500. So to do that, I can do it pretty quick here. I'm going to use the weekly chart, the S&P 500. Each bar here represents 1 week of data. Now, yesterday, Friday, that was June the 1st, the market on a daily basis fell over 32 points on the S&P. So it had a drop of 2.5% just in that one day. Now, what I wanted to point out to you is that you can avoid these type of disastrous waterfall moves down. If you're an investor or if you're a trader, whatever, if you're an investor, you can be out of the market if you use our cycle model. If you're a trader, you can be set up to take advantage of it. But the main point is this: the long-term trend is down. Our cycle model put the market in a long-term downtrend on April the 6th, 2012, right on this arrow here. So if you had been if you'd had access to the cycle model, you would have seen this setup. The model would have laid it out for you, that you would have been out of the market right here, neutral, and the cycle model turned down on April the 6th, 2012. Now, I just wanted to document that a little bit further for you to show you that I didn't just make this up right now. So if you want to look back, go to my video. You will see this video. Hold on, let me get the exact date. So go to my home page, optionsontheopen.com. Go to the home page, scroll down to the bottom of the home page, and you'll see a bunch of videos that I've posted, past videos. And go to the one that was dated April the 15th, and the title of it is Using Fibonacci Retracement to Define Support Levels. So click on this video and watch the video, and towards the end of the video I go through the cycle, the current long-term cycle, and that the model that we use, that I developed for our trading, actually had the cycle signal to the downside on April the 6th. And you will see this exact same chart, except you won't have the pricing data that is in here, and you'll see that the same signal is indicated right here. So go back there if you are questioning this, and see for yourself. So it's an accurate model, and it's what we use for our trading for long-term, short-term, intraday. And even if you're not a trader, if you have something like this to use, you would have been on the sidelines, and you would not be stressing this move down and not knowing what to do next. Now, moving forward, with this market coming off, using Fibonacci retracement from the October low of 2011 to the high here in March 2012, using the Fibonacci levels, we just broke through the 382, which is usually an area that's, if it's going to hold the first time or second time or third time, this is the area to hold. If not, when this 382 breaks, well, the next level is down to the 50, which comes in at 1248. Usually markets, though, will correct. If it's in a really major move down, you're going to usually get to the 618. So keep that in mind. Also, markets do not tend to bottom until the late summer months. So you can go back the last 10 years or more, and you can see that the cycles of the markets usually do not go up in the summer months. They usually go down or sideways, and they don't bottom until usually August or September. So keep that in mind, and with that in mind, the market could get a bounce up, but a lot of times it'll chop sideways and then gradually move or waterfall down to the 618. Keep that in mind. Now, as Jim Crammer on CNBC likes to say, you know, there's always a bull market someplace. So on Friday, that bull market was definitely on gold and gold futures. So we had a cycle bottom signal to enter using our cycle model that came at around 7:30 Central, right after the non-farm payroll numbers came out. The market exploded, so you know our model went long. But also you can see this trend line break. We use a lot of trend lines also to help us define breaks and support resistance. But at 7:30 our model went long, then it broke this trend line and it was just straight up like a rocket. Now while the S&P futures, you know, had a down day, a big down day of 2.5%, gold futures actually were up over 5%, about 5.6%. So huge market rally there. So if you have an indicating system cycle model like we have, you can find bottoms for cycles to play to the upside. You can find tops of cycles to play to the downside. So gold was definitely the flavor of the day. And based on that, one of our traders trader members of Options on the Open, who really specializes in gold, he had one of his best days ever using this cycle trading model. And based on our system that I developed, and which he uses for his gold trading, he's trading the gold futures. He made over $7,000 per contract. Now remember, that's cumulative. That was a cumulative totaling up all of his profits for June 1st day trading the gold futures. He was trading the August contract, and based on just the cumulative results of one contract, he made over $7,000. So, you know, if you're trading 5 contracts, that's $35,000 one day. If you're trading 10 contracts, that would have been $70,000 in one day. So with this spectacular breakout move using our system, he was able to trade long and short through the course of the day to make a cumulative return of over $7,000 per contract. So let me show you just the long trades based on the system for that day. Now there are too many trade setups to go through to show on one video, so I just couldn't do it. It'd just take too long. But the model has a lot of trade setups. And I'm just going to go through to show you the selective trades on a 400 tick bar using the cycle model to show you just the long trades for the day. So the first trade for the day, June 1st, came here right around 7:10. You can see here, almost a cycle low. Right here, got in, and look at that huge move. I'm not going to show you exits. I'm just going to show you longs, just because I don't want to make this video too long for you. So I'm just going to cycle through. I'm just going to move forward. So that came in, that's Central Time, around 7:12 Central. That was the first long of the day, and it had this huge move up. Second long of the day came here around 7:40 Central. Another long entry set up. Now these arrows I put in showing where the setups took place, but this is exactly what that trader would have seen. Here's the third trade long setup for the day. This came at about 7:48-49. Fourth setup for the day came here around 8 o'clock. I mean, it hardly has, these signals have little if any drawdown, and gets really good cycle lows and cycle highs. But I'm not even showing you the shorts. I'm just showing you the selective buy signals just using a 400 tick chart. Here's another buy signal. This was like the fifth one, I believe, at 8:48-49 Central. Here's like the sixth long trade of the day, 9:22 Central. I mean, look at this cycle low, boom, explosion. Here's the seventh long signal, 9:46 Central. Stayed out of all that chop. And here's the last trade at 14:08. So just to summarize, these were just long, selective longs on a 400 using the cycle model system. This particular trader member, was going long and short, but I just wanted to point out some of the accurate signals these were just the longs and how accurate they are at the cycle lows. So not bad for one day. And this guy is a really great trader, but a year ago he was struggling with his trading, about to give up, and he found the my site, Power Cycle Trading Model, started using it, and this is the results of his using the model and his experience and everything put together over the course of the last year. And so this is what he's been able to accomplish. So if you'd like to learn more about this system and our service, Options on the Open, come join us, and we'd love to have you and learn how to trade our trading model. And thank you for your time. Good luck trading this next week. One last note, if you're interested, I'll be raising prices soon on my Options on the Open site, but until that happens, I'm still having a special package at the powercycletrading.com, powercycletrading.com. Go to that URL and you will see a really nice special offer. If you have any interest, take advantage of it now before it changes. Again, thank you for your time.